Hello, fellow dreamers and future homeowners. Imagine this. The house you've been eyeing has finally dropped within your budget. It feels like a dream come true, doesn't it? But wait, before you pop the champagne and sign on that dotted line, there's something you need to know. Buying a house is a thrilling journey, but it's also a complex one. That listed price you see on your dream home isn't the full story. No matter where you're looking to buy, additional costs are lurking in the shadows, waiting to be unveiled. Today, we're going to crack the code and reveal the hidden costs of homeownership. These are expenses that often catch buyers by surprise, but with proper preparation, you can navigate them like a pro. So, why is this crucial? Well, being aware of these costs is your ticket to financial preparedness. Knowing what you'll have to pay can help you avoid financial surprises and make a more informed decision. So, whether you're a first-time buyer or a seasoned homeowner, get ready to unlock the secrets of homeownership costs. Before we dive into the nitty-gritty, don't forget to hit that like button, subscribe to our channel, and ring the notification bell. It's your support that keeps us going on this journey together. 1. Down payment. When you decide to buy a house, one of the first things you'll encounter is the down payment. Think of it as your initial investment in your new home. The more you put down, the better it is for your long-term finances. A good rule of thumb is to aim for a down payment of 20% of the home's cost. This percentage helps you avoid extra costs in the form of interest payments over the life of your mortgage. Let's do some quick math. If you're looking at a $300,000 home, a 20% down payment would be $60,000. However, it's important to note that not everyone can come up with 20%. In fact, the average down payment for first-time homebuyers in 2021, according to CNBC Select, was just 7%. So, realistically, you might be looking at a minimum of 3%, which in our example would be $9,000. Now, you might be wondering, why does the down payment matter so much? Well, it directly affects your monthly mortgage payments and how much you'll pay in interest over time. A larger down payment means smaller monthly payments and less interest paid over the life of your loan. So, if you can save up for that 20%, it's a smart financial move. 2. Property assessment fee. An appraisal provides an impartial estimate of your home's current value, and it's a step many homeowners encounter. Now, here's the kicker. The cost of an appraisal can vary significantly. While the national average is around $350, some homeowners end up shelling out over $1,000 for this service. As you can see, the price tag for an appraisal isn't one size fits all. It hinges on various factors, including your loan amount, the property's size, and the age of your home. Your loan amount can impact the appraisal cost because some lenders might require a more detailed assessment for larger loans. Similarly, a larger property might require more time and effort from the appraiser, which can drive up the cost. Lastly, the age of your home can also influence the appraisal cost. Older homes may need more in-depth inspections to assess their condition and value accurately. 3. Assessment cost. When you're buying a house, one crucial step is to have a professional inspector assess its physical condition. Think of them as the detectives of the real estate world, searching for hidden issues. Now, here's the kicker. Most communities require a professional inspector, and their fees are not just pocket change. The inspection fee typically covers the actual assessment of your potential new home. Inspectors will meticulously go through the property, checking for any pressing issues or repairs that may be necessary before you move in. However, here's the important thing to remember. The inspection fee does not include the cost of any potential issues they uncover. You see, during the inspection, they might find issues like a leaky roof, faulty wiring, or plumbing problems. These discoveries can be a bit nerve-wracking because they mean additional expenses on top of the inspection fee. So, when you're budgeting for your new home, keep in mind that the inspection fee is just the beginning. Be prepared for the possibility of needing to address some of these issues. However, don't let this discourage you. Home inspections are a crucial step in ensuring that you're making a wise investment. 4. Closing cost. The fourth crucial aspect of the total costs of home ownership is closing costs. Now, you might be wondering, what exactly are closing costs? Well, they're the expenses associated with finalizing the purchase of your home, and they can vary significantly from state to state. Closing costs typically range from 0.71% to 5.9% of the home's purchase price, and this percentage can vary based on where you're buying your home. For instance, if you're looking to buy a home in Missouri, you can expect typical closing costs to be around 2.76% of the final sale price. Now, you might be wondering, what exactly do these closing costs cover? Well, let's break it down. Closing costs cover a variety of expenses, including 1. Lender fees. These are charges associated with the loan you're taking out to buy your home. They can include things like origination fees, underwriting fees, and more. 2. Third-party fees. These are fees paid to outside parties involved in the home buying process, such as appraisers, inspectors, and title companies. 3. Private mortgage insurance or PMI. If you're not putting down a substantial down payment, your lender may require you to have PMI, and the premiums are typically part of your closing costs. 4. Escrow accounts. These are accounts set up to hold funds for property taxes and homeowners insurance. Your lender might require you to prepay these expenses at closing. So, when you're considering the total costs of home ownership, don't forget about those closing costs. They can add a significant chunk to the overall price of your new home. Make sure to research and plan accordingly so you're not caught off guard when it's time to close the deal. 5. Home insurance. So, let's get right into it. When you're on the path to home ownership, one of the key things to understand is that banks and mortgage providers typically require you to have homeowners insurance before granting you a home loan. But here's the thing, folks, basic policies usually offer minimal coverage. So, what does this mean for you? Well, it means you need to do your homework and research various insurance options to make sure you're adequately protected. Now, let's talk numbers. The average homeowner's insurance premium in the United States was found to be approximately $1,428 a year, according to one analysis. But here's the kicker, these costs can vary significantly based on where you live. Homeowners insurance premiums tend to be higher in areas prone to natural disasters such as flooding, hurricanes, earthquakes, tornadoes, and more. So, if you're considering buying a home in an area susceptible to these kinds of events, you'll likely be paying more to protect your investment. 6. Property taxes. It's something that townships and local governments determine for their city or county. The amount you pay can vary significantly depending on where you live, and it's typically based on a percentage of your home's assessed value. Nationally, property tax rates range from 0.31% to 2.13% of your home's assessed value, and this rate depends on your state. Now, let's take Missouri as an example. The property tax rate in Missouri is approximately 0.88%, which actually falls below the national average of 0.99%. So, what does this mean for you as a homeowner? Well, it means that your property tax bill is directly tied to the value of your home and the specific tax rate set by your local government. Now, before you start crunching numbers, it's essential to understand that property tax rates can fluctuate based on various factors. Local governments may adjust rates to fund schools, infrastructure, and other community needs. So, it's crucial to keep an eye on these changes. Additionally, it's worth noting that property taxes can be a significant part of your overall homeownership costs. It's not something to overlook or underestimate when budgeting for your new home. Property taxes, a vital component of the total costs of home ownership. Remember, these taxes can vary widely based on where you live, but they play a crucial role in funding local services and infrastructure. So, here's the bottom line, folks. The total cost of owning a home is so much more than just the sale price. We've delved into various aspects, from down payments to closing costs, homeowners insurance, and property taxes. And it's important to remember that these costs are not static. They can vary widely based on several factors, such as your location, the valuation of your home, and even changes in local regulations. Whether you're a first-time homebuyer or a seasoned homeowner, understanding these costs is crucial for financial planning and peace of mind.